Everybody, ladies and gentlemen, hello and welcome here to us at Nadex. My name is Philip and I will be once again your presenter for today's webinar. Today it's 1st of August, market movers. We want to see what the markets are doing, and just as always, if you have a look at your webinar interface, you can see that small questions box. I really appreciate any questions that you might have for me. This is not just a market commentary. I want you guys to learn something and at least get an understanding of the way that I'm looking at the market. So I appreciate any questions you might have, and I do my very best to answer those questions as we move through the webinar. Right now, I would appreciate a very short yes or why in that questions box to just let me know that the audio and the broadcast and the screen broadcast are working properly for today's session, which is scheduled as usual to run for about half an hour. And before we get started, of course, there are our usual risk disclaimers that I need to make you aware of. So please take a moment of your time to read through these carefully and make sure that you're comfortable with them before continuing with the webinar. Essentially, this says that trading, of course, involves risk, and that you should understand those risks and the risk associated with the instruments you are using before you are getting active in the market. As neither TradePost Position nor myself are investment advisors, nothing that we say should therefore be considered to be actual investment advice. All examples are shown for educational purpose only, especially true for the live section of today's webinar. We will be looking at the markets together. I will tell you what I'm seeing on those charts. I don't have a crystal ball. I don't know what's going to happen next. I just know that I do have my trading strategies, and if executed flawlessly in the proper context with the proper instrument selection, I know that I should be able to have potentially successful trades more often on my hands than losing trades, but there will be losing trades, and I will never know if that next trade will be a losing trade or not. So please keep that in mind. It's really just for educational purpose, and the main idea of that, why we're looking at those markets, is I want to illustrate concepts, strategies. It's not about a trade, and even if I place a trade on the Nadex platform here, it's never meant to be followed, and it's really just for educational purpose. So please make sure you're okay with this before continuing with the webinar. And then, of course, we also have a risk warning, this time coming directly from Nadex. Trading on Nadex involves financial risk and may not be appropriate for all investors. The information presented here is for information and educational purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Any trading decisions that you make are solely your responsibility. Past performance is not indicative of future results. Nadex instruments include forex, stock indexes, commodity futures, and economic events. Nadex binary options and spreads can be volatile, and investors risk losing their investment on any given transaction. However, the limited risk nature of Nadex contracts ensures investors cannot lose more than the cost to enter the transaction. Nadex is subject to US regulatory oversight by the CFTC. That being said, today's agenda, just as always, we want to show you guys the way we're looking at the markets. We want to show you guys the way we are trading those markets with our trading strategies. We think it's crucial that you do have a trading strategy because you want to have comparable trades in your account, and you want to have that statistical edge with your trading manifest itself, and this can only be done if those trades are comparable. Just a moment, I'm just reading. Yeah, David's giving some good feedback there. Again, referencing the number of losing trades and the number of potentially profitable trades. In the end, you have to work. Trading is easy, but trading is not simple. Or just the other way around. Trading is simple, but it's not easy. It's just like any craft. You have to practice that craft, and you have to pick something up. So, David, thank you very much for that comment. And yeah, you had a look at the agenda, and I suggest we just directly jump into our market analysis. And I want to kick off today with euro against the US dollar. This is already a well-known acquaintance of last time. And if you have a look at the chart, you can probably see why I really like that market right now. On the monthly chart, we have left this trading range behind us, 116.2 as a level. Let's make that larger here on the monthly chart. We have pushed away from that level, clearly broken that level here of resistance, moved higher. Right now, we're setting up for a little bit of pullback, but right now, clear new higher high, and definitely a new move is here on the way on the monthly chart. Our moving averages aren't really there yet, but we can see that this recent low in the prices here was the formation, was the beginning of some good, strong, bullish divergence setting up here. And yeah, market is pushing higher. The 10-period moving average will soon cross above the 20. It will take some time until the 50 falls into place, but the momentum that I'm getting here from the monthly chart is definitely bullish. Let's have a look at the weekly chart. Big picture, much more pronounced uptrend here. Obviously, we're seeing higher highs and higher lows. We're now a fair bit overextended from our moving average buy zone, but you can see, start to see the fanning pattern, 10 well above the 20, above the 50. Good strong momentum here going on. So clearly the weekly is in a very strong uptrend right now. Good momentum. And let's have a look at the daily. And this daily gives us definitely the same picture. Higher highs, higher lows. And again, we are a little bit overextended here from our moving average buy zone. Is it really that much overextended? No, it isn't. I wouldn't feel too much pain if the market pushed on a little bit higher before going in for a potential correction here. But in the end, we will never know. We have to find a trade location which gives us which helps us to stack the odds in our favor. The idea with trading is if we just enter a trade right now, there's probably a 50% chance of having a potentially profitable trade on our hands or a losing trade on our hands. And we never know. What we're doing with all our chart reading and looking at the charts and looking at the different time frames and analyzing our moving averages and looking at momentum from our indicators, we're trying to stack the odds in our favor. We think that if we are able to identify that this market is an uptrend by looking at the highs and lows and seeing that this market has good chart structure, no nasty gaps, no surprises. Apart from this move here, it's pretty much continuous price action, especially easy, of course, with a forex market, which is trading pretty much 24 hours on at least 5.5 days per week. But we have this good chart structure. We have a trend. We have this fanning structure in our moving averages. We only get this if the market is in a strong trend. Compare with what the market has been doing here back in March. Pretty much going sideways. It wasn't really clear what's going on there. Those moving averages are all over the place. No clear structure. And compare this now, what we're seeing here on the right side of the chart. Every of those factors that we identify helps us to stack the odds in our favor. And this means that we won't be able to get a 50-50 chance of having a potentially profitable trades in our hands. But maybe we're able to push this to 55 to 45. 60 to 40, or maybe even 65, 35, 70 to 30. This depends now on your experience, and it's never about the next one trade. The next one trade could be a losing trade, or it could be a potentially profitable trade. The outcome is always either that one or that one. This probability that we're going for here with our trading strategy only is able to manifest itself over a large sample set of trades. And by stacking the odds in our favor and doing our accounting after 100 trades, then we should be able to see, wait a minute, I was able to put the odds in my favor and have potentially profitable trades in about 65 to 70% of all trades. I still have those losing trades. I will never be able to avoid those completely, but I can try to have more good trades than bad trades in my account. This is what we're doing here with our technical analysis. And part of that is, if I was to trade here on the daily chart, I would be waiting until I get a small bullish candle setting up here in my moving average buy zone. Right now, this would be a little bit overextended. Now, let's have a look at the lower time frames to see what's going on there. And when I scanned the markets, I saw something which I really found interesting. If you know our trading strategies, you know that we are looking for two types of setups. One setup is a market which has just pulled back or is about to pull back here into a moving average buy zone, just like we are seeing now on the daily chart. But the other one would be a breakout of a flat level. And when I had a first look at this Euro-US dollar hourly chart, I immediately saw that flat level. And so you might be tempted to say, wait a minute, Philip, there is this flat level round about here. You see one touch here, another touch there, immediately there, another touch there. And let's make it larger so that you guys can see it better. You see this level. You see that we are in the context of an uptrend. And you might be tempted to say, yeah, that's a beautiful setup from the momentum breakout strategy. I'm trying to capitalize here on this breakout. There are several things which are off on that chart, which might be easy to miss if you're just starting out with those strategies, but which were pretty clear why I clearly didn't consider this trade for potential trade, this setup for potential trade. So let's have a look at what's going on here. We are in the context of an uptrend, also clearly visible here on the higher time frames. Remember the daily chart, the weekly chart, everything was pointing upwards. However, the daily a wee bit overextended. Not too bad, but an early warning sign. Now, price pushed higher, we made another high, and then we started to pull back, and now we're testing here the same level several times. So far, everything looks really nice and good. However, what we want to see is some kind of compression. We want to see some kind of, in this sideways phase, while the market is making the same highs, it has to make the same highs because we're testing this level. What we want to see is a series of higher lows. We want to see a compression pattern. And we're seeing here just the opposite of that. We're seeing some kind of expansion pattern forming. You can see market pulls back to form a low, and we test this level and pulls back. So far, everything looks nice. We test this level again, but now we're making a lower low, and we're testing the level again, and another lower low. And we're coming close, and sure enough, we get this breakout, but at that point, we've seen that we didn't get higher lows, so we're getting lower lows. This was a very, very first or a very severe indication for me that this breakout, if we get the breakout, there's a decent probability that it will fail. And sure enough, price broke out, but came back, and it fell. It fell pretty hard. It formed a large candle. That market failed big time. And another crucial ingredient for that momentum breakout strategy is that we don't want to see any divergence in our indicators when the market is about to break out. And that's the main reason why we have both MACD and RSI on our charts. And you see that level has been tested here for the first time. Let's try to put those. Yeah, I'm not using those so often, and sure enough, it doesn't work. Sorry, guys. I want to hint at this candle here. That was the first test, and at that point in time, I'm just dropping down. Let's get the crosshair cursor here and see enough. Sure enough, that's the level here. At this level, I take a reading of that level here for MACD, and then I'm going to the next test of this level. And sure enough, MACD is showing me a lower value. And this is what I don't want to see. I want MACD to go flat. And the moment I see a breakout happening here, I want MACD to be able to make new higher highs as well. If price is breaking out to form new higher highs, I want to get the second level of confirmation by looking at my indicators. If price makes a new higher high, my indicators, both MACD and RSI, should be able to do the very same thing. And just looking at the way that MACD has behaved here was clear. If we get a breakout, there's a very high probability this breakout will be going nowhere. And sure enough, we got the breakout, market started to fall apart. And yeah, since then, moving averages have fallen back into place. And by the way, talking about moving averages, yes, those candles have been somewhat small. They have been getting larger here. Next thing that was off with this setup. And sure enough, our moving averages have already crossed again back to no longer giving us this fanning pattern, no longer being in the right order. Another indication that a lot of momentum has been lost at this level. So I found this very interesting and fascinating because I know when I learned those strategies, I would have been very tempted to say, wait a minute, I have this level, it's an uptrend, so sure enough, that has to be a trade. No, it isn't. And especially with the momentum breakout strategy, it might be somewhat a little bit difficult to really get the divergence reading with MACD and RSI right. And the next thing is, which is easy to forget or not observe, candles are getting larger, moving averages are no longer there. Again, we want to stack as many factors or the odds in our favor, and all those small things, and the divergence is a major thing. If that one's not there, the trade or the setup is definitely off. All those are little blind spots on the picture. All those are little early warning signs. Does this mean there was never a chance that the breakout could have worked? Absolutely not. It could have worked. But again, over a large sample set of trades, I know that if I see something like that, it's definitely less likely for that setup to work. And for that reason, all those factors which I have mentioned means that setup is gone. The trade is off. Now, when I'm talking about a trade, this would have been a long breakout trade for me. Our strategies are always trend following strategies, which means we're trading in the direction of the trend. The trend has been up, and for that reason, I would have been looking for such a setup. Now, if you say, that's all nice and dandy, I'm not interested as much in understanding or in being a trend following trader. What you just told me is that the market was about to fall, come down at least a little bit. You might have been inclined to search for potential short opportunities. And yeah, let's just move back here to the chart for a moment. If you saw that this happened here, looking at a 15-minute chart, sure enough, the failed breakout here, and we're coming back. And now we see a trend forming here to the downside. And now we could be looking for potential trading opportunities here. We're making new lower lows, and we're pulling back here very close to a moving average sell zone. Again, this would be a counter trend trade on the higher time frames. Personally, I wouldn't be interested in taking those trades, but now just for the sake of demonstrating the platform, you might be tempted to say, okay, market's coming lower, we're getting a bearish candle here, there might be some momentum here to the downside. And so one way to potentially trade that setup could be, we're going to our forex binaries here on the platform. We're looking at euro against the US dollar, and let's just go for, that was a bad decision. Let me just pick the 3 p.m. session. Just a second. Sorry guys, the platform hangs for me just a moment while I try to reload everything. I logged in just before the session, actually a bit before the session. So there might have been a decent chance that the platform just stalled for me and that I had been logged out. Just a moment while I try to log in again. And we are going to forex binaries. We're looking at euro against the US dollar. And sure enough, we're back again. Sorry, seems to have been my internet connection or something. All right, back again. We're looking here, and guys, you pick whatever expiry cycle you prefer, and you pick whatever strike price you prefer. That's completely up to you. Just because I'm looking here at one expiry cycle, which is now the 3 p.m. cycle, which is still going now for 2 hours and 41 minutes. That's just me. That's just an example. Again, no preference whatsoever. You have to balance multiple things when it comes to trading options, binaries, and spreads. One thing is, how long do I still have for that market to move? 2 hours and 41 minutes in this example. And how far do I think that market could move, should move, something like that, within that time period. Now, price is currently trading at pretty much $1.18. So we're looking here at this 118, and you see, sure enough, we're very close at the money, and sure enough, the price is very close to 50 as well. Quick rule of thumb, if an option is trading at the money, which means the underlying market is trading around the strike price, that price should be somewhere around 50. So if you think market might be going down, one possible trade could be to sell this contract here. And we're just looking here at, the next question is always, how much should I sell? How many contracts should I trade? The right approach to that position sizing question is, in my eyes, always coming from a risk perspective. I want to understand how much money can I lose if that trade is not working for me. I'm always coming from the bad side of the trade. I'm trying not to be driven by greed and think, oh, so much money that I can make so much. I don't care. How much can I lose if it's not working out? Because I always want to protect what I have first. This is now a demo account, and that value of that demo account is $21,000. And our approach to trading is we want to risk around about 1% of our account on any one given trade. That's just us. This is in line with industry best practices and so on. However, your approach might be totally different. You have a very hard time to really wipe out your account trading if you're always going for a 1% risk of that trade, or 1% risk with each and every trade. We have several webinars on those issues, and I'm pretty sure in the archives here at Nadex you'll find a lot of interesting stuff on position sizing. Rule of thumb for us, we want to risk 1% of our account, at least I personally do so. So this would be a 1% risk of those 21,000 bucks, round about $200. So if I was to trade one contract here, my maximum loss would be $46 right now. Why? I want to sell that contract because I think the market might be going down. I will never know, but right now I think that might be a little bit more likely than not. So I'm selling this contract right now for $51.50. And this $51.50 means that if the underlying market closes below 1.18 at expiry, which is in 2 hours and 38 minutes, then I will be going to be able to keep the amount I just got for selling that contract. If, however, the underlying market closes above that strike price, this means that at that stage, I will have to settle this contract. It's a binary contract. I will have to settle this contract for $100. And you will see that the difference, or the distance between 51.50 and 100 is exactly what I could be losing on that trade, 48.50. What are my potential profits? Well, if everything works out as planned, I will be able to keep the 51.50 that I got or could get now for selling this contract. So the next question is, if I want to risk $210, how many contracts could I trade? Well, how many times do $46 risk fit into those 210? And you don't have to do any fancy math. You just click on that button here and you realize, wait a minute, 5 contracts, I have a risk of 230. No, that's too large. So I could be trading here with that position sizing algorithm in my head. I could be trading about 4 contracts right now, and I'm placing that order. Again, just for demonstrational purpose, don't follow. It's never a trade that I would be taking right now. It's just for the sake of demonstration. You see the position has been filled. And the idea is now, wait a minute, if that trade starts to go in my direction, do I really want to wait until 2 hours or the remaining 2 hours and 36 minutes? Or can I manage that position actively? Sure enough, I can. I could be trying to trade this contract now. Just clicking here, I want to buy this contract and I want to scale out of my position. I want to sell those contracts here, and I want to buy those contracts to close my existing short position. And if price maybe drops to 25 bucks, then I would be interested to close 2 of those 2 contracts. And as you guys can see, I have a limit order sitting here and waiting, and we're just waiting now for the market to move in my direction. Now, David is mentioning position sizing and the general topic of having small accounts and small amounts to invest in. There are different approaches. First thing, if you really have a very small account, you might be inclined to go for maybe a 2% risk. You have to understand that the risk of ruin really goes up fast if you're looking at small. If you're looking at a 2% risk, 3%, I think everything more than 3% risk is already pretty much quite risky. Let's put it that way. I would never do that with my own trading. Having good and proper position sizing is definitely spot on. David, what you might want to try to do is look at the spreads. 2 things, you could be looking at spreads. You always want to enter those spreads very close to the floor or the ceiling of the spread range in order to minimize your risk there. That's one way to approach that issue. And the next thing is you could also be looking here to go for options which are a little bit further out of the money or further in the money. depending on what your direction is. Let's have a look at if you think, wait a minute, Philip, you just told us the overall picture is market might be going higher in the long run. So why not pick a different expiries? Why not go to the weeklies here, for example? Those are still 3 days now left in their life cycle, and price could still be going higher. And let's have a look here. Why not look at that contract here? Again, I would never trade that contract. It's just for the sake of demonstration. Keep that in mind. This contract is now trading for just 750 to 1725. Now, why is it so cheap if I wanted to buy it? Well, first, it's rather expensive because there's still 3 days left in that option. So that's rather important. I have still a lot of time that this trade could work out for me. But the next thing is strike price has to be above 1.1925. And this means, sure enough, price has to keep on rising for quite some time. However, I could be entering that position now for just a maximum loss of 17.25. And if this trade turns out to be a potentially profitable trade, my max profit would be 82.75. When is it that max profit? If at the end of the expiries, end of this option life cycle, the underlying market closes above, not at, but above 119.25. You're getting on that trade here a very, very good reward to risk ratio. You're getting a 4-to-1 reward to risk ratio approximately. That's outstanding. However, the market is telling you here, Philip, I'm just seeing a probability of somewhat round about 11 to 12% that this might be working out in the end. So the things you have to balance is remaining time in that trade, the probability, which is just, you can think of the mid price between bid and offer roughly as the probability from the mathematical model for pricing those options, that this is a potentially profitable trade. And then you have the reward to risk ratio to consider here. 4-to-1 is nice, but I'm paying for that dearly with the reduced probability that this could be a potentially profitable trade. But my maximum loss here is quite reduced. And so, David, if you say I have to get that number down somewhat, and part of your trading style is to accept the lower probability, but keep on shooting for those stars, perfectly fine, perfectly viable approach to trading. Just don't be fooled by the reward to risk ratio and think that's an outstanding trade. No, you pay for that trade. You pay with the reduced probability here. So let's just put on that trade for the sake of completeness. And yeah, so that's pretty much what I wanted to show you here with the platform. If you haven't signed up for the demo account, do it. It's easy, it's fast, and just practice putting on those positions. Get used to the platform so that when you're trading your real account, focus on the markets, on the chart reading, and that handling the platform and those Nadex contracts really is just second nature to you. All right, I want to also have a very quick look at two other markets and focus there on the higher time frames. And I find right now the Russell is pretty interesting. Last week we saw that the Russell has broken above this support resistance level here, but sure enough, we have come back and we're making now again lower lows here on this pullback. Is it really dangerous territory right now? No, it isn't. But for a strong market with strong bullish price action, I would have wanted to see something like we saw here, big candle, but after that it just fell apart. And again, loss of momentum also in our indicators. We have moved below our moving average buy zone. So overall, I'm not that bullish here on the Russell, and but therefore be focusing either if I want a strong trend on other markets, or if you're looking for a range-bound market, we're back in that trading range. And I'm sure enough, if that's your style of trading, some nice setups and strategies might be, or setups might present themselves there. And let's have a look at the Nasdaq. And I find the Nasdaq is currently pretty interesting, because if we pick our levels and see that the market has pushed beyond this level here, and we came just back and we tested the high, or with the high of today's session, we tested this level here once again. And if we now drop here to lower time frames, you can see moving averages starting to move here to a short, to a downtrend. We see a pullback here. We see a small bearish candle setting up here. Sure enough, after that, we saw some moves to the downside, way too large candle to trade that setup here. But overall, I see more bearish momentum happening here in the Nasdaq. I'm currently on the shorter time frames, and on the higher time frames also definitely back below this level. Again, definitely not a sign of weakness. David is mentioning risk-reward ratio is something to consider, but ultimately the market movement, price action is the prime consideration. Yes, always. I'm always the setup where I determine my reward to risk ratio. That's the last step. I've seen first thing the chart structure. I've seen the trend. I've seen the moving averages. I've seen the pullback. I'm seeing the good trade location. I see the small candle, and only that. In that final last step, everything is coming together, and there I start to ponder how can I implement that strategy, which instrument would I choose, what is my reward to risk ratio, what's the probability of that setup. Absolutely there with you. For us, trend is king. No trend, no trade. All right, guys, time's pretty much up, and yeah, I hope you enjoyed today's session and you heard something new, you found something useful. Any further questions that you might have, I'm more than happy to answer those. And yeah, just as always, thank you very much for joining in, and have a look at the webinar archives on the Nadex website. Sign up for that demo account, get used to the platform. Highly can recommend, just practicing a little bit, and you see how easy it is to put on those trades. As always, after the webinar, there will be a short survey. Any feedback is really appreciated. We're running those sessions for you, and so anything that helps us to tailor our presentations more to meet your needs is really appreciated. So for me, it's been a pleasure. Thank you very much for attending and the great questions that we got today. And to all of you now, a great day. Happy trading. Thanks again. Take care and bye-bye.